just kind of saves the step of having to post it and do all that stuff. I still have to go like put a thumbnail on it and click on a few buttons to make it where it's monetized. But I stole the idea from Coach. It's what he does. He does a lot of live streams. It's a great idea. I need to turn down that one. Okay, perfect. It is a great idea. All right, so let's look at this. Let's do this in-day wrap up. Let's see what's going on here. Okay, we're going to come back to that. Stick a pin in that. Let's just do what we normally do. Okay. These guys today sold options for $23. They sold them yesterday. Well, the market finished 17 points in the money. They sold options at the 52.20 strike. Unfortunately, the market closed at 52.02. Difference between 20 and 02 is $18, which is this amount in the money. So they had to pay to unwind the position. In any event, it's still a winner. They only won $165,000 instead of $627,000. Oh well, still a nice day. 13 cents negative on the month for earnings. This is looking low compared to last month, and I keep checking the math, and so far it's right. All right, triple QY. These guys sold options for $121 at the 18,200 level. So, okay, so what did the market close at? Oh, shoot, 18,100. So that's 100 points in the money. Remember when we talk about in the money or out of the money, we always talk about from the person's perspective who bought the option. But in any event, so this option cost $99 to unwind. So we were trying to make $1.8 million, and it still ended up making 300,000. You could see how you could see how this strategy buffers the returns on a portfolio. I mean, I mean, the market that we missed, but pretty much we missed by a long way. We were making our strike price was 18,200 and the market ended up at 18,100, and we still won because we sold the option, and the option was so overpriced in the first place. We still squeezed a little $20 profit out of there, right? I mean, anyway, it's amazing. It's amazing. They're powerful when you put them to work in your favor. All right. So, but still for the month, down 13 cents. It's been a rough month, especially with that $4 million loser 3 days ago, or three trading days ago. All right. I thought I heard a deer or something. IWMY. All right. I hope this is loud enough. All right. IWMY. These guys, the two most important numbers, strike price and the option price. They sold the 2070 strike for, call it $13. Well, market ends up at 2073. Perfect. So when you buy a put, you are bearish. We are selling puts, so we are bullish. The strike is 2070. We want it to be over the strike. The other people, the people that bought it, to be in the money from their perspective, they want it to be under 2070. So we won the battle and the war. 2073, we didn't have to pay anything to buy it back. So it just expired worthless, $980,000 winner, and that was after yesterday's $1.3 million winner, which is awesome. 11 cents negative a month on an actual earnings. Been kind of a rough month. These funds have been getting beaten up a little bit. All right, SPY T. I have a new way of looking at this. The spreadsheet is is terrible. It's the worst, maybe the worst spreadsheet ever. Not really a spreadsheet. I'm just kind of, this is more like a notepad. I have some formulas and stuff. I'm hoping someday this turns into something. I will say this. I'm trying to turn it into, or it is turning into this. So this right here, we're going to start looking at this every day. This is derived from that last sheet. This is the SPY versus JEPY, which is JEPY, the Defiance fund where they sell a put. Okay. And then it's also versus a SPY T, where it's the Defiance fund where they actually own SPY shares. And not just SPY, they also own IVV, but it's the same thing as SPY, where they own, index shares in the market, and then they write options. Now, in SPY T's case, they write a call spread instead of writing calls. Anytime you write a call or you sell a put, that's 100% capped. You cap all the upside over the level of the strike price. Well, they're selling a call spread, which is selling the calls, but then buying a call at a higher strike behind it. In any event, these guys are capped also. SPY T is capped between the sold strike and the higher bought strike. But then if the market goes up over the higher bought strike, SPY T can still participate. So SPY T should do better for bull markets. It's going to have more upside, should have more upside participation. This fund is very new. This is so what I did here is I charted the change since inception. And of course, if the fund paid a dividend, I just took the dividend out in cash, but I factored the dividend into the price, to make it a fair comparison. So in any event, you could see here the riskiest, of course, is the SPY, because that it's unhedged. They don't sell options. Of course, it's also going to go up since it's not hedged, it'll also go up the most in a big uptime. Now, we haven't had one yet. The SPY hasn't had a chance, but in the short time that SPY T's been around, but as we get big bull runs, I would highly expect the SPY to outperform both the SPY T and JEPY. But it should be interesting to look at how much. In my opinion, all of these funds are good ideas. It's always a good idea to sell options and to try to make a little extra income, especially if you need income. There's nothing wrong with it. But there's a jillion ways to do it, and there's a new fund coming out every day. And yes, we probably reached peak covered call funds. I mean, it's just insanity. You can't even hardly keep up with them, and it'll probably get worse. And yes, maybe in 2 years down the road or something, we'll look back at this and we'll laugh and we'll say, you remember that that winter and summer that all those freaking covered call funds came out, and there was a different one coming out every week, because what I think will happen, one of two things can happen. Something bad could happen, like a black swan event, and just make it, where people aren't as interested in investing and don't have as much money and everything. That's not what I'm thinking will happen to these. That's what the naysayers. Well, I think that these will fall out of favor, because what'll happen is if everyone piles into these after a couple of years, and these will compress volatility a little bit. But I think also the market will go into sustained bull run, and volatility will be compressed anyway, and it'll be even more compressed because of these, and these funds won't be paying hardly anything, because the market, you've heard me and Jay talk about the efficient market hypothesis. Well, the efficient market hypothesis says that there's no free money. And if there is any kind of pricing inefficiency, it'll take care of itself. People in the market will figure it out, and they'll buy the one asset, sell the other asset until they're back at parity. But that's what I would expect to see here too. But it should be interesting to follow the change between, because SPY T and JEPY it's just two different ways of solving the problem. SPY T sells a put and doesn't even own any underlying. They don't have to. The put gives them the economic exposure to the underlying. So they're fine without owning it, but they don't even own the underlying. They just own a bunch of T-bills. But that's one way to do it. And because when you sell the put, look, JEPY, they get a lot more money. Like, let's look and see what they got today. Well, they got $15 for, oh, no, wait. No, they got $23 for selling the put. Whereas the spread, excuse the spreadsheet, but the spread is always about $6 or $7. So these guys sold an option for $14 and they bought an option further out of the money for $7. So they earned the difference. 14 less $7. They make $7, and the risk is the difference in the strikes, which is 15. They always use strikes that are 15 apart. So the risk is 15 less the 7 they received. So the risk is 8, I believe, right? Which are masquerade. Yeah. So right here, they earned 6.9 and they're risking 8.1 on this spread. And that's kind of the typical. It's about a 1-to-1. They're usually risking about 7, 1-to-1, or maybe a little bit more than 1-to-1. But in any event, so even when these guys are right, and this call spread is a bearish play. So they're right when the market finishes under the strike price of the sold option. Well, the sold option is this one, is the lower strike. So in this case, if the market finishes under 52.10, it's a full profit for these guys. Well, that's great. But they made 6.9 points. Okay. Whereas if you did the JEPI strategy, you got 23 points. So it's about a factor of 3 times 3x as many points doing the JEPI strategy. The drawback is you're totally capped on the upside. You only get, you can't appreciate a little bit just depending on how far the in the money options in the money, but not a whole lot. Not a whole lot. So the good thing with SPY-T is, though, it eliminates that one problem. It also eliminates another problem, and eliminates the other problem of making 23 points a day. I mean, 23 points is a ton of money, but that comes at a cost. You can make 23 and give up all your upside, or you can make, you can make $7 and give up, a portion of your upside. And I don't know the right or wrong answer. I kind of think it's probably the right or wrong answer. If you're really trying to make income, is just write the put like JEPI does, give up all the upside, or, give up basically all the upside, just taking the income. It is an income fund after all. But I don't know. I'm thinking the SPY-T might be a really good compromise. I'm trying to quantify how much you have to. I'm trying to find a way to quantify the difference between selling the put and capping yourself 100%, but making the more money. I'm trying to make some kind of metric that can even that out. Anyway, there's more to come on that. Let's look at some other stuff. I could talk about SPY-T all day. I'm making a video on SPY-T. I've been working on it forever. I have like 10 or 15 slides, and all right. So here's single day stocks. So you can see it was a good day for the usual suspects. Cony, Misty. I started putting the ones I follow, Misty, Cony, Nvidia, and Tesla, down to the left-hand side. And then more the boomer stocks more on the right-hand side. And I say boomer, they're more like JP Morgan's, are more like Gen X stocks. And that's right up I'm Gen Xer, and so's Jamie Dimon and all those guys at JP Morgan. And Gen Xers run Wall Street, in my opinion. All right. So that's a single stocks. Now let's see what else I got. We aren't going to look at 30-day chart. I guess we can look at 30-day stocks, but this is kind of an old chart because it's fine though. I mean, it still works. You could see that you really wanted to own Misty the past 30 days. The ones I really like is I used to have one called a weekly where I went back to the Friday before, but that was actually the last day of last month. So I'm not now calling that the monthly, or I'm calling it. I saved it, but I guess it was on other tabs somewhere. In any event, okay. Hey, I'm going to look at if you guys got any questions, put them in the comments, and I'll look at the questions here in a second. Look at the comments, and we'll see what we got going on. See if there's any comments for me. Let's see what futures are doing right now. Stock index futures. Oh my gosh! Now that is what you would call flat, 0.00. That is flat. That is something else. Looks like Russell's the weakest of the bunch, down 5/100ths. Did Bitcoin ever come back to earth? It looks like when they say Bitcoin's percentage, what's that? I mean, 24 hours, I guess they go on. I mean, or the market, they go on like the New York Open. That's when the day starts. Or sometimes they start at midnight, when you're talking to the market. I mean, I guess the Bitcoin just starts at midnight, but midnight where, I guess, because it's worldwide. Midnight in New York or midnight in Asia. I mean, I always wondered what their metric was there. It's not that big a deal. It's always up every time you look at it. But it looks like right now it's pulling back a little bit. Maybe even it's going to go the other way. Look at this. We actually got a close outside the Bollinger Bands, and we're trying to have a follow through. That could sometimes be, it gets you some bearish momentum, but it's probably a huge trap, or who knows? Who knows? All right, so let me check in on the questions here and see if I've got any questions. I was working on a new thumbnail. Anyway, I don't know. I think I messed it up somehow because it says there's 20 of you guys watching, which I really appreciate. But it says comments are not supported. Somehow I don't. I have a burner account. Hang on. I'm going to open. I have a YouTube burner account. And I have like 3 different identities because I have Max Convexity. My parents didn't really name me Max Convexity. My family's name is not really Convexity, but anyway, so here I am right here. So maybe I can watch it and then maybe I can see the comments here. Hopefully you guys are asking me stuff. I don't know. I never give anyone any notice. So these are, just kind of, it's just easier than having to post them and stuff. Okay. It doesn't look like there's any questions right now, and that's fine. Oh yeah, there. Okay. We got a comment there. Yeah. Well, I'm in love with Spy T. I mean, but there's a trade-off. There's a big difference between 20 and 60. I mean, 60 is a ton of money. And yes, you should be reinvesting 2/3 of it, but I know a lot of people are just buying it and not reinvesting the 2/3. And if the market's up that month, if you have a good month in the market, it's you have a little NAV erosion, but still you still make hella money. I know people are doing that, just kind of risking it. I have a feeling people are doing that. Anyway, look how pretty it is out here. It's golden hour right now. It's awesome. It's been a great weather day here in Austin. But yeah, I need to start. Maybe I'll start doing these nightly updates, doing them regular here. So let's see what else we got to check in on here. So let's look at the buffer report. Okay, I could have sworn I switched. All right. So yes, this right here, it says weekly, but it's actually just for this month. This is actually from April, or I'm sorry, March 29th to right now. And I just love this. It's because it's been great for Defiance. And it's because the market's gone straight sideways. So the funds with more buffer are probably gonna be the ones that are gonna do a little better. I wouldn't be surprised to see the global X ones do pretty well also because they have more, but YBTC is just a machine. I need to do a report on that one. All right, so is this true? Was Tesla really up 4.37% today? I guess we could look. I didn't show the single stocks here. I guess let's look. One of these guys, I forget who it was. I think it was Tesla added, or no, it's Nvidia. One of these guys may have added some strikes, but I need to, but I haven't, it's not reflected on my chart yet. This chart is just trapping on the upside. Look at this. You get you get a close outside the Bollinger Bands with the follow through and some extension, and then you get 2 or 3 bars that direction, boom, and then it slams the other direction. It hits the midline, keeps going, then gives a sell signal with no follow through, and that's a huge bull trap, and that turns into the mother of all bull traps, because then by the next day you're back 10 points the other direction. This fund is or I mean, this fund Tesla's incredible. I guess if you got in early enough, if you got some calls right when you got the momentum signal and the follow through bar was at 10 o'clock on Thursday, but that's assuming you got out in time. It ran up 8 or 10 points real quick, but then by the next day with the price was under. Anyway, this is just a crazy trading one, but right now this is not exhibiting trending behavior in the 30-minute time frame. This is anti-trending behavior, or reversion to the mean, or whatever. I drew this trend line thinking they might back test it and try to start a rally off it or whatever, but no, it's turned into like the magnetic line. They're just going around it. All right, so let's see what else we can talk about. Let's look over here at Nvidia. I hope that's not too windy. I know the wind just picked up. All right. What's going on with Nvidia? Yeah. Now this one was not up like like the other ones. I mean, this one strike is in no danger, and its strikes were in no danger last week either. It's been making money off the calls and not off the synthetics, off the short calls. We'll check out a little Misty action. I'm trying to speak into the microphone's the reason I'm looking over here. I guess I could hold it. It's just a pain. These things, there's a boom adjustment. I need to get a boom adjustment. I have a desk inside and start doing reports from the desk in my office with the boom, but I don't know. I just like it outside so much more. Here in a few weeks, or in a month for sure, it's going to be too hot to. I might be out here in the mornings and at nighttime, but it'll be too hot during the day to be screwing around out here. All right, well, same thing. Mr. Strikes or Misty strikes are in no danger. So I guess we looked at all of them. Now we need to look at a little Cony here. This is doing the same thing as that other one. It's just trapping, bull trap on the top, the top of the Bollinger Bands, and it runs to the other side and bear traps. Then overnight, boom, then it opens the other direction. No discernible trend really, or in the 30-minute time frame. I like to look at the 30-minute time frame. In this time frame, it's super choppy, back and forth, back and forth. All right, well, let's check out Let's do this. I'm going to look at Tress real quick and see if they still have, see if they've adjusted their spread at all. They haven't. They're doing fine. This one that says short 300, they sold this option. It's down to 29 cents. We're rooting for that to go to zero. And this one right here, we're rooting for this to go to zero, $1.34. They both, they're the same strike. One's a call and one's a put. So they can both go to zero if we do what's called pin the strike and we go right to 92.5 on TLT. Let's look at this chart of TLT. All the charts are doing the same thing. Just, I mean, super choppy, and one day it goes one way, and you know. Okay, but so the key strike is 92.5. Well, 92.5 is right here. I'm going to draw the line on the chart. We'll see if these guys, how sharp they are. We'll do just like a trend line. 92.5. Okay, we'll see how close they can nail it. But anyway, this would be the ideal outcome for these traders, because it would make them earn money on both sides of the trade. They're selling a straddle. A straddle is a call and a put at the same strike price, and also at the money at the same strike price, the 50 delta. So they're selling the, but when you sell the straddle, you can't, both of them, one of them is going to be worth money, but you can't lose on both sides either. But one of them will be worth some money, but they also sold them. They also initiated those as well. And then plus, if they get a big outsized move, we always talk about outsized out of the profit, out of the valley of death. And I haven't kept up with this. I haven't drawn this recently. I bet it's in the same spot. I bet I could just extend it and it would be basically fine. But if they get a big move outside of this area, we've talked about this before, the straddle they've sold will lose money, because you know, but they also own a strangle for a hedge, and the strangle is on, and the calls are above a strike above the market, and the puts are strike below the market. So it doesn't matter which way they go. If we get an explosive move in TLT, this fund TRES should cash in and should make money. But so far they really haven't. Now that takes me back here. Let's look at some other stuff back here. I'm really liking this this way of looking at the total return since inception, and you can see kind of, you know, you can see kind of how it works. On this one, the SPY, like I always say, of course it lost the most because it has no buffer. They don't sell options. They don't bring in any income. It's not hedged at all. These other ones aren't hedged, but a covered call strategy is somewhat self-hedging. You know, the strategy itself builds a hedge in, which is the buffer. So like I say, all these strategies are doing the same thing. There's a jillion funds, and someday people are going to look back at this and they're going to laugh, and they're just going to say, do you remember whenever that, you know, that summer, that's where I was going with that, all these funds open, and now it's just a wasteland. What's going to happen is we're going to get a bull market that's going to go for 2 or 3 years. Yeah. Volatility is going to get so compressed, and these funds will start closing down, and only the good ones will still be here. But that will be the ones I talk about now, like JEPI, JEPI, JEPQ, the Global X ones. You probably can't kill them. I don't know. I mean, I would bet you the Curve and Yield Max are around. They're both really good funds too, you know, but in any event, we'll see though. But at some point, there will be a reckoning. But between now and then, it's going to be just probably happy days are here again for the income for the option selling ETF business, and it should be fun to cover. But there's no one's reinventing the wheel. They all sell covered calls, but they have different the way they buffer, the buffer they have, the way the buffer reacts to different markets because of the different option strategies. That's where I'm trying to add value, because that's what I try to study up on and know about. So that's try to be where I comment. But there's so many good people out here that have so much good comment on these funds right now. I'm thinking of Panda. I'm thinking of Panda's new dashboard's incredible. It's incredible, and I know he's probably going to go pay service, and he should be a pay service. But that dashboard's incredible, and all the stuff Corey does is absolutely incredible too. It makes me want to. It makes my spreadsheets. Sometimes I want to give up on my spreadsheets because they're so primitive. But I do like what this is showing. Okay, so SPY T since inception. Okay, well, this is just the SPY versus the SPY T. So this just doesn't have JEPY on it. But anyway, it's it's what you'd expect when the market's down. SPY's riskier. The SPY is unhedged. SPY T, because it sells options every day, it sells that call spread brings in an income. The income's the buffer. Okay, so here's one on Tress. I thought this was interesting. I was talking trash about Tress. Well, if you guys heard my interview with Jay, I asked him, I said it looked like when the fund first started, 2 months ago, there was a time when maybe a day or maybe two, they could have I call it rebalancing or recentering, but he just said they would. Well, I bet that's what he said. But anyway, but where they could take the trade off for a huge profit on Tress, and they didn't do it. Well, Jay said that they had limit orders in and they didn't get hit. So anyway, that's the way it goes. But the market didn't know the limit orders weren't going to get hit, and I forgot about it. But Tress was actually trading. This is the red line is Tress's benchmark, which is TLT, which is bonds are very non-volatile. You can see the most it was up during this time frame, which is the last couple of months, is 1.3%. And maybe it's down 0.5%. Bonds are just boring bond, typically. Well, Tress, though, it takes no prisoners. It was killing it. Its price was killing it for a while anyway, but in any event, then it sold off, and now they're both under the line. And now Tress is actually trading under TLT because it's hit. Because we haven't had any bond volatility. The bond volatility is drying up. Maybe I'll chart this also with an overlay of the bond volatility chart. That'd probably be interesting to see. I'll fix that by tomorrow. But I really like these charts. So here's a really good chart this is really an informative chart. Triple QY. This is these guys since inception, which is last September. September 13th, I believe. Anyway, you can see the first couple of months was bad, and the market was down. I mean, heck, the SPY was down 9% from just in that month. But good old covered call fund only down 5.21%. Look at all that buffer. And it's not just one day, it's buffer on a daily basis. It just on a daily basis, there's huge cushion, or we could call it cushion or whatever. Problem is, on the upside, the cushion weighs you down. Then it goes the other way. But that's the trade-off you take when you get these funds. But anyway, this is a pretty interesting chart. You can see right now the market's up about 16. The high yield fund's up 8.59, 8.6. So yeah, almost 9. I mean, it's one way of looking at it. So then I illustrated. So that's a since inception chart. That goes back to September 13th. Here's just a 30-day rolling change. So it just changes. So this is the most recent 30 days over here on the right. So in the past 30 days, the I don't even know which one's which. I'd have to think about it. The red one's going to be the red one's going to be NASDAQ, the index, because it's not as buffered. So when the index was up, that it was really up. The yield fund only got about half of that. Triple QI only got about half of that huge thing. But then in the ensuing pullback, the NASDAQ itself has dropped all the way back to, all the way back right here, basically to unchanged. I guess the fund did too. The high yield fund did too. Triple QI did as well, but it didn't drop from as far of a point. It's just a muted. You just get muted. Muted's one way to look at it. Buffered behavior. But anyway, that's a 30-day rolling. So you can see there's been time periods where we've had a bullish past 30 days. This was probably about 2 months ago when the 30 days it was looking at was probably the 30 days in December or maybe January. We had some 30-day periods in there where it just basically went straight up. But this is an interesting chart because you can see how it does in all different markets. And it's consistently, even in 30-day time frames, the broader market's just up 5%. These are up 3%. Let me see if I have any more. This one's interesting. So this is SPY T. Now, SPY T hasn't been out very long at all. All right, so this is SPY T and SPY. So SPY T is a different way of solving the problem. SPY T and JEPI. JEPI sells a put, so it has the effect of a full cap. Well, SPY T sells a call spread, which has the effect of a partial cap. And you can see it in the results. Even though SPY T hasn't been around very long, the blue one is the SPY and the red one's the SPY T, right? You could just see that the little difference every day. There's a cost of putting on this hedge. And it costs you about whatever the difference is. You can tell about 15/100ths of a point every day because the return appears to be over the past couple of weeks. We'll see, if this keeps up. The return of SPY T appears to basically track right behind the SPY minus 15 basis points. Now that probably adds up every day. That might be a terrible deal by the end of the month. I just started tracking this, or it probably is a terrible deal. There may be all kinds of good reasons to stay away from this fund. I just like the idea of it. I think these funds are a good idea generally. So I'm just like to drill down into the separate strategies and try to identify specific ideas and strategies that I think will do better and maybe have more buffer, especially if we could find a fund that has more buffer where we want it, which is on the downside, and less buffer on the upside. That would be ideal. And they tried to design them like that for sure. But anyway, I like these new charts right here that go back and look at stuff. All right, well, let's take a look at the market. Then I'm going to let you guys get out of here. Oh my gosh, the NASDAQ is the market even open right now? 0.00. Russell's up 0.5%. So the small stocks are moving. By the morning, they'll all be up. You watch. They'll all be up. They'll close it Friday. Friday will be record highs. Same thing every week. I don't know. I have no idea. I have 0.0 idea. Okay, well, yeah, this is Russell, but I want to look at 24-hour Russell. Oh, yeah. 24-hour Russell is not up 0.5%. So my bad. 24-hour Russell is actually down 9/100ths. All right, guys, I'm going to let you guys go. Thanks for tuning in to my live stream. I appreciate it. Thanks for tuning in to my eclipse coverage today. I don't know if anyone watched it. I do know it wasn't a whole lot. but it was kind of, I thought it was kind of cool how fast it got dark and then light again. Or it seemed fast to me because I was sitting there talking about these funds. That's what I like to do. All right, guys, remember, it's not financial advice, just for fun and entertainment only. But what I was saying earlier is, yeah, go look at the people. There's other people that have a lot better content, maybe different, better and different than I do. Panda, Corey, and of course, everyone knows Retire. I mean, there's a lot of other Gen Z investing. There's a ton of them. It's a great time to be an investor because we have choices. Well, the great thing about that is, with all this independent media out there with YouTube and stuff, we also have choices in the media we consume, and we don't have to listen to CNBC anymore. We can listen to Retire on Dividends, which I think is way better. All right, guys. Well, I wonder if I should check my, darn it, I probably should check my chats before I go off. It's a shame that I waste a chat session. I don't know why I do this every time. So let me go back and try to find it. I looked for it a second ago and I couldn't find it. Okay, well, there I am, but oh yeah, I opened it in Firefox. That's where it was. Okay, yeah, here's my chat session. Okay. Well, man, I'm glad I didn't just tune off. All right. Hey, Norman's always on all of these. I appreciate you, Norman. Thank you. David O. Okay. I don't know anything about USOI. I know it's the oil fund and they sell covered calls. I bet it was painful to have whenever oil went below zero a few years ago. I bet this reverse split. I bet it did exactly what Tesla is doing, and it's a great example. And there's nothing wrong with this fund, just like there's nothing wrong with Tesla. But there's something wrong with Tesla stock lately. The stock's going down, just like the price of oil went down. The strategy can only do so much with what it can do. So if you get a high yield fund in a company and the company's stock goes down 50% one year, then 50% the next year, your high yield fund's going to be way down too. That's welcome to the stock market. But in any event, okay, so yeah, Eclipse was great in Southern Illinois. Yeah, I couldn't see shit, dude. Oh my gosh. I mean, well, anyway, it's on the internet. It was so cloudy, could not see anything. I had the glasses, I still have them. I don't know where they are. Could not see shit. But but anyway, that's cool. It was there in Southern Illinois. So yeah, that's badass. Now I'm sure there's a way where I can look at the comments without making you guys look at this dumbass screen. Okay, so that's what I'll try to do by my next live stream. Is figure out a better way to monitor the comments. But I'm going to start doing live streams more often because I don't know. I stole the idea from Coach. He does it a bunch, and it just cuts out of having to cut the video together. Excuse me. It cuts out a step of the process and it gives me more time to interact. I need to get off my butt and finish this. I have a long form video on SpyT that has like 10 slides, and I'm making slides all the time. I need to get that video out. So part of the video is going to be for sure. I mean, you guys got a big preview on the video because there's not a lot of information out on SpyT yet, but here's about all we know about SpyT. We can just go off what we have so far, but you can see on any day, on every day, I shouldn't say every day, there's a few days it did worse than the underlying, but on most days it outperformed the underlying. And that's just because of the call it sold. Now, that's also because the market's really going nowhere. As the market goes up more, even though it has, I think it'll underperform more. And I know that's ironic. It shouldn't, but at least it won't be totally capped. The JEPY is totally capped. This fund will still be able to make something in bull runs. We're just going to have to see. I want to see a rally where it goes up 5% in 2 days and see how it responds. It's like I say, definitely going to do better than JEPY. It's these things, when you study them, you need to study opportunity cost. It's all about if I'm not going to invest in this, it's still going to be investing money, so it's going to be invested in another asset. Is it going to go in real estate? Is this going to go in I'm like I always say, I'm not looking to YOLO. This is just money that I would invest anyway. It doesn't have to be in a high yield fund. There's lots of better investments out there, just different ones. There's nothing wrong with these dividend aristocrats. I say aristocrats because of the Disney show. But anyway, but there's nothing wrong with there's a lot of good real estate investment trust out there. I don't know if that'll be this case this time next year. Real estate's going through a tough time, but it's not the only way to do income investing. You could also buy government bonds. My grandfather used to buy municipal bonds, and I don't think that's a big deal anymore. But municipal bonds used to be free from tax, federal and state. Sometimes you could find triple exempt. And so if you were in a higher tax bracket, you could get those. It was almost like free money. Or wasn't free money, but it was no taxes, which is kind of like free money. So there's a jillion ways to do income investing. And you can also just buy growth investments and just sell a few shares every year. There's no one said you have to do it my way but then there's other people that just take all the money and put it in income investing because they like income investing and then take the income from that and buy share and there's no one right way to do it. Or, I mean, there's definitely no one right way to do it. And if there was, I certainly don't know. But if I do know, I'm going to tell you the best I do know for sure. If I find out something, I'm going to give you my best opinion. Then if I find out I'm wrong, I will tell you like I've had to do several times. But in any event, yeah, I'll get busy and make this video on SPY T or finish it. But you know, uh SPY T is a great concept. Um, it's a great concept. I almost don't know why people just don't do this. I mean, it doesn't even seem like you give up that much. I'm going to have to see. We're going to have to follow this for 6 months, but it looks like you're getting income and without really hampering the return too much, just based on some rough estimates I made back of the napkin math. All right, guys. Well, I'm going to let you guys get out of here. I will be back in the